Welcome back. You're still tuned into Midcap Radar. Balaji Amines posted a good set of Q2 earnings with margins expanding and EBITDA to growing 14% on a YOY basis. We are now joined by D Ram Reddy, the Managing Director at Balaji Amines. Mr. Reddy, good afternoon. Thank you so much for joining in. You know, volumes have declined in Q2 by 6%, but first half volumes have been flat. Can you give us a guidance of what will FY25 look like in terms of volumes? Are you seeing pricing increase as well, which has come back across segments?
See, if you see the volume growth, there's about 6 to 7% growth on the standalone basis. And even the EBITDAs also have been improved year-on-year basis. If you see the EBITDAs were about 16%, now it is 19 plus. And we aim by the end of the year, the volume growth should be around 10 to 12%. And even EBITDA should be between 18 to 22%. And prices were down for the earlier quarters. Now we expect for the coming quarters the prices should improve, whereby you will see the revenue growth as well as in the volume growth and even the bottom line growth also.
So, Mr. Reddy, good afternoon. Thank you for joining in. With all that you just mentioned that you're expecting a better second half, do you stick to your FY25 revenue guidance of around 2,000 crores and for FY26 as well, since you mentioned that you will be 3,000 crores in FY26 with a 24% margin? Do you stick to that number since the first half you have done only 730?
If the prices improves, definitely we will go that. But with the current pricing, I can say the standard basis it will be 13 to 1400 crores. On the consolidated basis, it may go to around 18 to 1900 basis.
Okay, so if pricing increases, then it will be 2,000 crore rupees, otherwise 1,800 to 1,900 crore rupees. This despite the fact that methylamines plant has been commissioned this year itself, Mr. Reddy. And what happens to FY26?
Yeah, see, methylamines, we have come with a big capacity. It is just commissioned. We cannot take it into the account immediately. It may take some time to come to the optimum levels of the capacity utilization. We have increased from the current 48,000 metric tons per annum to 88,000 tons. We are absorbing the 100%, that is for 48 to 88,000, it will take some time. So we can say in the coming years, what I said in the 26, 27, definitely considering these capacities, you see, we have many plants on table with very good capacities. We are just waiting for the time, the improvement in the market. The moment the market improves, we are ready with all the capacities. Definitely we will go across this 3,000 crores, what we said earlier.
Since you mentioned capacities, Mr. Reddy, existing DMC plant is also under upgradation and by adding additional equipment as well, right, for manufacture of electronic grade DMCs. What is the how big is this opportunity, if you could tell us that? What's the market size and when will this start to reflect in your financials?
The good thing is the EV, actually the DMC was meant for the electronic vehicle battery manufacturing parties. But those manufacturing, EV battery manufacturing, they have not taken at any start. Everybody is talking, but nobody has started as of now. Somebody said that November, but I still expect in the next year only. The moment they start, we are ready with our raw material manufacturing. We are waiting for the EV battery manufacturers to start. And it's very difficult to say how much, what will happen, because until otherwise they start, we cannot see how much I will sell to them.
Okay. So what is the total capex, Mr. Reddy? Your press release talks about a lot more chemicals, a lot more expansion plans that you have in place. What is the capex you'll be putting in? How will you be funding it? What is the generic asset turnover on such investments?
See, in the parent company, in Balaji Amines, we'll be doing about 250 crores for the manufacturing of these after methylamine, the dimethyl ether and propylene glycol pharma grade and also N-methyl morpholine. For these, all these things around 250 crores we are doing, which we will be doing from the internal accruals. And in the subsidiary end, because you have seen whatever the downstream because of the subsidiary is not doing well, for that we have done remedy. Existing plant, we are doing the modifications for manufacturing of some valued products like data, and piperagine. Along with that, we have planned 750 crores investment in that subsidiary, that is Balaji Specialty Chemicals, where we are going with the cyanide-based products, which are all first time in the country, second in the country, which may come a year's time. From now, you can take 1 year's time to commence those products in the subsidiary. And that's the reason I am confident that 3,400 crores on consolidated basis from the 26-27, we are assuming that these expansion will come into the commencement of the cyanide-based products.
And what will the total, how will you be funding this, Mr. Reddy? So you said internal accruals, yeah.
Mostly internal accruals, maybe end of the expansion, out of 700 crores, maybe 250 crores, we may need some borrowing from the banks.
All right, Mr. Reddy, thank you so much for spending time and taking us through the quarter gone by. Wish you good luck for the rest of the year as well. That was the management of Balaji Amines, sticking to the revenue guidance of 2,000 crore, provided prices improve in the second half. Time for a short break. On the other side, we'll be joined by A.K. Tiwari, who is a member of the PNGRB, to discuss the impact of the government's decision to cut APM gas allocations by 20% yet again. Stay tuned.